Good afternoon. I'm Dryden Pence. It is Friday, November the 13th, and this is our 10th episode of videos regarding the coronavirus, recovery, the economy, and things like that. We are at 246 days since the beginning of the national emergency, and I'm going to cover the virus, the economy, the election. We've had an election since our last video, and the markets. Now let's cover the virus thing. As you can see, summer didn't kill the virus. It's still with us. And the virus is the virus is the virus. We've talked about this many, many times. And it really doesn't care what's going on in the rest of the world. Now, as we begin to move into the fall and in the winter, we're seeing this resurgence of the virus in cases in the United States. Now, this is concerning, but it's also an important thing to recognize, right? We had the first kind of peak that we saw before back in the summer, and then things leveled off. People began to figure out and get back to normal, and then all of a sudden, coming into the fall, we've now had a strong resurgence as people retained more indoors. Also, folks became a little more careless, and we've had all sorts of crazy things happen. But the important thing to recognize and to take a look at this chart, look at the kind of the lower right-hand corner there. That is daily deaths. Now, what's really important is you've begun to see an increase in the virus, but not near so the same ratio or amount of increase in mortality. That's important. And why? Because in the 246 days since the national emergency was declared, we have learned a heck of a lot about this virus. And our medical community has learned how to treat this medically in a much better fashion. So we don't yet, we're very close to a vaccine. We don't actually have it distributed yet, but we do have therapeutics, and we do know how to treat this better. And that's very, very important when you consider what we're kind of going into here. So when you think about this, although there's bad news that the virus has resurged, there's good news in that we seem to be able to deal with it better. Now, look at the United States versus Europe. And the important thing to recognize here is you can see that how this is working its way. The trend is similar. However, the European Union has a much higher peak, much higher caseload, and they are also seeing a much greater increase in mortality. So some of the things we do here in the United States seem to be better. Now, I've broken it down to the big four states. We've talked about this, but the other thing here is recognize that the virus is now pretty much all the way across the country. You know, it kind of started in some places, didn't go to others and things like that, but now it's pretty much made its way all the way across the country. It moves as it moves. And so if you look at the big four states, California, Florida, New York, and Texas, all of them are experiencing an increase. I mean, again, please go back and remember when this whole thing started, all the best science was out there saying initially, hey, summer's going to kill the virus. And that was what people were planning around. Well, that didn't happen. As we said, this is a novel virus or a novel virus. This is the first time the world has dealt with this thing. And so it's been a bigger challenge indeed across the world than anybody really thought it was going to be. But we're doing what human beings do, and that is we adapt and we overcome. But you're beginning to see in each of the states, you're beginning to see, and these states have dealt with it differently, right? Florida and Texas have handled lockdowns a little bit differently than California and New York. And so each state has kind of dealt with this a little bit differently and with varying levels of success. But we continue to move through it. And if you can also take a look, again, the important thing is that the mortality, though cases are up, mortality seems to be much better under control. People talk about this virus in terms of waves. And I want to show you a key piece of data because everybody argues, well, we're testing more, we see more cases, or the data is bad, and in many times it is, and the results are not being kept up. But there's probably one number that you probably can keep up with fairly well, and that is hospitalizations. Now, this looks like a pretty standard wave scenario to me. So we had the first wave, and we've had the second wave. Now we're moving into the third wave. of hospitalizations. The important thing to recognize here is, if you'll notice how we look at the number of hospitalizations we have in the country, that peak area, is around 30 days. So when it begins to peak out on you, on this chart, you can look at what's 50 days, 50,000 cases up to 60,000 cases on those first two waves. The period between crosses over going up and crosses over going back down is about 30 days. So as we can think about, as we move beyond this, we move beyond the time now where things are can get a little dicey here, you tend to roll back to the other side of it about 30 days later. So we'll see if it's the second big wave of the virus. It's going to be the third big wave of hospitalizations, we think, and we're going to need to be able to see exactly how this works. But again, the virus is the virus is the virus. It runs a period of time and it begins to affect people a period of time. And then the vast majority of people that get it do recover. What we have also learned in 246 days is that we've had to be able to move from protecting everyone from everyone to protecting those at risk from anyone. And this is important. We initially were kind of cloistering everybody, and now we've been able to recognize there's groups of the population that don't need to be quite so confined and constrained, and then there's others that we have to really, really protect. And those are those that are over the age 70. So the 70 plus age cohort is still the most heavily affected by the virus. That is where the mortality comes in at the greatest level. And those are the things that we must be most careful about. And that matters when we get into the protracted economic effects as we think about how the nation's going to react to, indeed, the next wave of this virus. Because, again, we've learned a lot how to deal with it. And, indeed, what's interesting is you can take a look at, since July, total retail sales have been above pre-pandemic levels. So when you think of consumer behavior and what we do, the American national pastime is shopping. Right? What we do, how we shop or where we shop or the amount of money we spend shopping is actually back above pre-pandemic levels. That's very good news. Very good news. Now the question becomes, how do we adjust? How fearful should we be of this next big wave? And the point I'll make is not as fearful as we were maybe of the first one, because we're better prepared for it and we know so much more about it. And take a look at this. Recognize, we went through this period of time of just awful unemployment, but real wages and salaries are recovering dramatically. Real wages and salaries are not back to where they were before, but and neither is employment. But you can see the trend has improved dramatically, and hopefully we'll continue to see a trend of improvement in the employment picture and also real wages and salaries. So these are the things that we've learned. So as the virus comes, as this next wave deals with it, there's really two things going on. We have to let the medical community fight the medical battle. And we have to let the economic and the government fight the policy battle over stimulus. It is stimulus versus virus. Now, you've heard me say this many, many times, but we kind of know what to do. It's whether or not people have the political will to do it. So originally in the first big wave, what did we do? Well, we had 48 days worth of shutdown. We followed it up with 80 days worth of stimulus. So we got more stimulus than virus. Then as things drug on and this thing got politicized, we began to see most of that benefit. Again, remember, it was supposed to end in the summer, right? Summer was going to kill the virus. So all the planning they did went into okay, let's just get to the summer. Well, now that's passed. We're in the fall. And you can see that, while people are able to economically get through, you're beginning to see the net effects of this as we get August, September, October, and November. You begin to see some of that stimulus is being spent off. The people who were for a while unemployed actually spent more money on unemployment than they did when they were working. But now, since we've gone this long period of time without the additional stimulus, it's beginning to show up in the economy. And so this is one thing that we have to pay close attention to. So again, we know how to fight the battle of stimulus versus virus from an economic policy standpoint. The tools, the processes, the procedures are in place. They just need to execute on them. The medical community is fighting the medical battle, and there's really good, a lot of good work on that. You're beginning to see you've got vaccines, you've got therapeutics, we've got a lot of good news about that, and it looks like that part of the battle is beginning to be won. Fundamental difference between the virus now and the virus 6 months ago is we now know what we need to do, and we now know how we need to fight it, right? And we now know the things that we have to do to work through it. Social distancing and wearing masks works. And then now we're coming to the table with therapeutics that begin to work and the potentials of a vaccine. So this is a positive development. We're no longer floundering around out there with uncertainty of what's going to go on. We have some moves for progress. Now I want to move on. We've had an election. It's not completely over yet. Now, the election was a big thing for everybody. People were very, very worried about it. You had two very extreme polarized sides here. And it's not over yet. Okay, we've had the voting, but it's not over yet. And that's important. The most important thing about the election is the election part of it's over. Now we're waiting on some results. But also the important thing is we're kind of gradually able to move beyond all of this. And get to what's next. So there's some key dates, and until this is all finally finished, you could have some moments of volatility in here, and I'll get to that in just a few minutes. But this is an important thing to recognize. Uncertainty around the election can create some market volatility, which is why we've been a little more cautious in this period of time that we've been talking about, and we're not quite ready to turn loose the horses here on what we're doing in the markets. And this is why, as I've said last time, we don't buy from the red aisle or the blue aisle, we buy from the human aisle. And that's what's important. We face on what consumers do and what they're going to do with the economy. That's really, really important, because you want to be in a position that the economy, that the markets, that the things you're invested in and the companies that you're in are in pretty good shape no matter what. So there's some key dates here. December 14th is when we have the Electoral College. Then that's when the actual voting for the presidency takes care of. So we'll have a final answer, before then. We probably have some probabilities, and I'll cover that with you in a second. The next key date, and this is actually the most important one. I've been talking about this now for several months. The most important piece of this election season is the outcome of the Senate. Okay, now the election's on January 5th. There'll be a runoff in Georgia. It's now down to these two seats in Georgia. Okay, that's where it is. That's where the whole thing comes down to. And why is it important? What's important is that if the Republican Party controls the Senate, if they have 51 votes in the Senate, then you probably will not see a repeal of the Trump tax cuts. So that means taxes will stay low. If for some reason those two seats in Georgia get turned into Democrats, then the problem. You have 50-50 in the Senate, which makes Kamala Harris the most powerful woman on the face of the earth if she is the vice president. So that's where these things come in, because then you're in a situation where a tie would probably, in the Senate, would probably result in an increase in taxes, and an increase in corporate taxes could be negative for earnings. So this is why people talk about the market. I'll come to that in a few minutes, and I'll reiterate this. But this is why the market sort of went up, right? Because the market actually likes divided government. The market went up because if it's a Biden presidency, then they think there's going to be a tremendous amount of spending. And if it's a Republican Senate, then that means there's not going to be an increase in taxes. So lots of spending, no increase in taxes, seems to be very positive. So that's kind of where the world is right now. But again, this isn't over. The Senate doesn't change. We don't know that for sure until after January the 5th. And then January 20th, we have an election day. So there's still key issues out there. The big one is the stimulus, right? How much stimulus are we going to get? It's stimulus versus virus. How big is the next wave? And how much stimulus do we have to put in? What do the lockdowns look like? They know what to do, but the question is how much. The other thing is taxes. I talked about that. The final outcome of the election, and then the containment of the virus. All of these are key dates and issues we have to deal with. Now, let's go back to the election just real quick. Here's where it stands as of today, right? It was a very close election. It was not a dominant blue wave as many people were predicting. We've always thought it would be close. We've said that several times, and yet it was. However, here's where we are. And also, an important thing to pay attention to with regard to policy. Republicans increased their positions in the House of Representatives. And that tends to say that the idea that this election was about a very big progressive platform is probably not that true. The fact that Trump may very well not win this election, it was more about people didn't like Trump, not necessarily the policies. Because if everybody wanted the far liberal policies, you wouldn't have seen Republicans win in the House of Representatives. This is important because it means that we're in this position where there's some more moderation, which involves a less likelihood of some of the things that might have a negative effect on the market. And again, going back to the Senate. So I want to just bring up these things. There are 4 states now that are eligible for a recount. There are 4 states that are eligible for a recount. And if this occurs, President Trump would have to win pretty much Georgia, Pennsylvania, and Wisconsin. He'd have to win 3 of those 4 states, and specifically those 3 states. He'd have to win Georgia, he'd have to win Pennsylvania, he'd have to win Wisconsin, all in a recount to be able to end up with 270. So right now, the way it looks, you have a President Biden, a Vice President Harris, and a 50, maybe a 51 or 52 seat majority in the Senate, thinking that you get one of those 2 seats in Georgia, and that's where we end up. So that's the most probable outcome, is a Biden win in a Republican Senate. That's the most probable one, and that's what the market is talking about, and that's what's looking out there. You do have the possibility of a Biden win and a 50-50 Senate. I talked about that a few minutes ago. And the third thing, you do have a possibility of Trump win after recounts. All of that goes to say we're not going to know the final answer yet, but I think that most people can look at the most probable outcome is number 1 that we have up here. Now, what does that mean relative to markets? Well, we continue to see the economy recover. We continue to see the markets recover, but as we've said all along, this has not been a uniform recovery. There are sectors that have lagged, and therefore, while some sectors in the market have kind of, really, like information technology and things like that, have really done very well, there's still others that are lagging, and those are the things that we have to look. How do they catch up? When do they catch up? Are there opportunities there in that part of the market? And this is what the market has done since those very dark days in March. So if you can look at the S&P 500 from there. So we've recovered dramatically. It has not been a uniform recovery, and that there are opportunities throughout multi-sectors of the economy as we watch this recovery. We also recognize that you've had this upward movement since the election on the assumption that it's a Biden presidency and a Republican Senate. Anything that changes that, and we're not going to know here for another month or so, anything that actually changes that could create some volatility. This is what happened after the election in 2000. And that wasn't really finished until December 13th. So this is the thing that we have to be a little careful about right now, is we look at an outcome-driven volatility, right? Some things we just don't know, versus fundamental consumer demand. The good news is that fundamental consumer demand stays strong. If we get some form of stimulus, which we think we will, and the fact that employment has recovered dramatically, people have liquidity and the ability to buy things. Nobody cancels Christmas just because their guy didn't win the presidency. It's important for you to know that. Nobody cancels Christmas just because their guy didn't win the presidency. So consumers are going to do what consumers do. And if you look at this short-term volatility that we may have, if things get confusing, you have the virus, you have the election and those things, but you also have this important thing is how quickly we recovered to the pre-pandemic sales levels on retail sales. Our economy recovers. So in summary, we should know about the presidency by December 14th. And we should know about the Senate by January 6th. So all of this stuff is driven by the calendar. Just wake up every day, it gets better. And we should know about vaccines by the end of the year, for sure. And they already have vaccines that are successful. But the question is, how quickly do we get them? How do they get distributed? How soon will it be that enough of the country has them? Those kind of things. We also should know about stimulus by the first quarter, or if not sooner. You probably could get some stimulus negotiations between the House and Senate and something passed even sooner, maybe even in December. Everybody gets a Christmas present. So then we also should expect some volatility as we move to clarity, right? So, and that could happen fairly quickly. I mean, this is November 13th. We can get some clarity over these things fairly soon. But there could be some volatility one way or the other, right? Volatility can go up, volatility can be down. But we really are going to have some clarity over all these issues and an underlying continued recovering economy. That's important. The fundamentals of the economy are continuing to improve, and that's an important issue even as we look into next year. So there's a lot of good things that happen regardless of the outcome of any of these things. And here's the one thing that we should know, is that consumers consume no matter what. No matter what's going on, like I said, nobody cancels Christmas because their guy didn't win the presidency. Consumers continue to do what they do. And so if we focus our activity, our investment activity, we focus our economic analysis on the no matter what part of the portfolio. Don't worry about the red aisle or the blue aisle, but just focus on that no matter what area. Then we think that we have good, solid economic performance going forward into next year, and that we think that the companies that are in those sectors and in that areas will continue to see good performance. So I've talked about the virus, still with us, not gone, heading for a second wave, but we know how to fight it much better than we did before. I talked about the economy, continues to improve, and while there'll be some policy derivatives on both sides, I think that we continue to see the fundamentals of the economy moving along just as we continue to work with the virus. The third thing, I talked about the election, not quite over yet, and changes in proposed outcomes may create some volatility in the markets, but those are things that we just need to be cautious around and pay attention to. But sooner or later, all that clears up. And then the last one is the markets, and we think that between now and the end of the year, until some of these things are resolved, it's best to kind of stay the course, maintain some dry powder, not get overextended on either side, stick with the no matter what part of the economy in our investing. So I hope that this has been helpful for you. I hope that this has given you some hope. I hope that this has given you some assurance and clarity as to some of all the crazy things that are going on around us. And most importantly, this is right before Thanksgiving. And I want to take the opportunity to thank each and every one of you for the time that you spent watching these videos. We hope that they have been helpful. Recognize that in spite of all the chaos, chances are over the last 250 days, you've also had the opportunity to spend a little more time talking to your family, maybe spending time with your family, maybe remembering that in spite of everything that's going on around us, we have an awful lot to be thankful for. So thank you very much. Look forward to seeing you again soon. Have a great Thanksgiving, and we'll see you next time.